We see Apple stock lower right now in the pre-market. It appears that it was the guidance that's weighing on this stock. Apple's saying they expect the same thing year over year. What else are you seeing from this report?
Frank, we're seeing that the company is executing on their product cycles. Services remains very, very healthy. And as we think about the next several months, I think we'll see a reacceleration of growth. I think China obviously remains a concern. iPhone actually grew there in the most recent quarter. And so stepping back, the ecosystem is vibrant. Apple is continuing to empower developers. I think the consumer, obviously, there's softness in pockets, but we still see growth improving over the next year and continue to like the stock.
All right. So just for clarity for the audience, the street was looking for 5% growth in the holiday quarter. Again, Apple saying kind of the same as last year. I want to talk to you about the iPhone. They're saying the iPhone 15 actually doing better than the iPhone 14 did during the same period last year. Are the concerns about the iPhone and the sales, are they maybe overblown?
I think the challenges that consumers are facing are real. The December quarter in the prior year period had an extra week, which impacted the guidance and the outlook relative to expectations. I do think that what's important is that the installed base is continuing to increase. And so even as replacement cycles lengthen, the size of the install base and this continued mix up to the Pro and the Pro Max is helping to support the iPhone business. Really, when thinking about this current cycle, the titanium, the new industrial design, a lot of the software, the video and camera capabilities, I think are notable, and that's driving consumer interest in purchases of the device, which is positive if we think about the medium to longer term story.
All right, so sounds like you think it may be overblown, some of the concerns about the iPhone sales, possible weakness in China. One thing that may be maybe underreported is the services growth, up 16%. Year over year. What do you make of that? Is that something that's sustainable for Apple?
I think the services growth is sustainable, and it's driven by this continued growth in the install base. As the iPhone and really the broader Apple install base continues to increase, more people are consuming more services. So iCloud, as an example, remains healthy. The App Store remains very vibrant. Music is another example of which is continuing to perform well. Apple Care. And so a lot of these big businesses are performing well. And as long as Apple is able to deliver value to customers, both on the product side and the services side, I think the services business remains very well positioned to see a durable growth as we think about the next 1 to 2 years.
All right, we're talking a lot about services, about hardware. One thing that we're not really talking about is AI. Were you disappointed about the lack of talk about AI in this report?
Apple doesn't typically talk about new products in an earnings report. What we've seen over in recent years is they're continuing to incorporate artificial intelligence and machine learning in areas like the watch, for example. If you think about fall detection, crash detection, the ECG or electrocardiogram app. And so we're continuing to see the company infuse AI and machine learning into its products. I suspect we'll see a lot more of that in new products over time. The iPhone, of course, continues to incorporate it. And so I think AI and the opportunity that the technology represents will be additive to the Apple experience, which I continue to view as fun, differentiated, and secure, which helps keep customers delighted with their products.